Thanks for joining into today's trade setup, and it's an interesting week simply because it's a week wherein we're coming back from a week of consolidation for our markets, and there is fair degree of news flow. Remember, the GST Council meet didn't yield any results, so maybe you watch out for what's happening to fertilizer stocks or some of the others, so on and so forth. But let's start with the global news flow first. Asian stocks have faltered as Japan warns on yen moves, and typically when yen-linked movements come in, it's very difficult to ascertain what the impact would be over the medium term. But the short term, Asian stocks have certainly taken a bit of a backseat. Global investors, in fact, have turned cautious on one's favorite Japanese stocks as well, as you will see in terms of flows. In fact, there's a Nomura note today which lays out how flows into Asia ex-Japan have largely been underweight. So EM dedicated funds are not quite favoring emerging markets on a positive way. Even India is an underweight. I think 2.2 percentage points underweight currently. Imagine what will happen when it turns overweight. But for now, it is wobbly. Oil has edged lower as traders focus on geopolitical risks as well as demand. And amongst other big news, China and EU agree to hold talks on EV tariffs. Remember, EU is on the verge of slapping some fairly high tariffs on Chinese EV exports or imports into EU. They've agreed to hold talks, so this is significant as well from a global EV perspective. And in other bad news for you and me who are travelers, the new AirAsia boss has said that high airfares will persist as travel booms. In fact, there is a note from Goldman Sachs on a stock which benefits out of travel as well. We'll get to that in a moment. First, flattish for the US markets. The futures currently about 21 points lower. I think it's very important to get these futures, so I'm glad we did that. Asia, like I said, largely wobbly. Nikkei marginally in the green, but most Asian markets, if you look at ASX, Straits Times, Kospi, etc., it's a mixed picture with a slight bit of caution. The implied open for our markets about 100 points lower. 23387 is what is being indicated. Let's wait and watch how this shapes up. This is, of course, as of 7:30 a.m. Now, bring up the trade setup for the day today. There is no downside confirmation as yet, despite the pullback on Friday, because as you can see, the pullback on Friday was fairly muted, but the market remains a buy on dip. So people are waiting for a significant dip to buy into. As of now, we haven't seen too many shorts on the index per se, but there are specific pockets on which there are significant shorts that have been built up. So if you look at cement and fertilizer stocks, there are some large short positions that have been created. I saw, for example, GNFC, I saw Shri Cement, I saw Dalmia Bharat amongst the stocks on which the OI build-up has been very, very large, and there was a price movement which was negative as well. So I think I'll keep a keen eye out for some of these stocks as well. And because the GST Council meet, as I said, hasn't yielded any positive verdict on fertilizers or some of the others, I would suspect that the pullback that started on Friday might well continue today. And this is what happens, viewers, when you try and play themes which are not earnings backed. You do not know when will the slide stop. And that is the problem. So anybody who went into fertilizer stocks on Thursday thinking that momentum is in favor has been caught on the wrong foot, very likely could be caught on the wrong foot. I hope the stocks recover and I hope you get the money. But the limited point I'm trying to make is when you're trading or investing, if you back it with some earnings or some news flow which is verified, the probability of success is much better. Anyways, the other aspect is telecom stocks, and it's very difficult to predict if price hikes on the telcos will happen very shortly. Remember, Friday the rumor was that there will be a Vodafone price hike. Now it's absurd because Vodafone cannot hike prices by itself. It has to be concerted industry-wise price hike by all three players. So Friday we had Vodafone doing well. Friday we had Bharti also doing well. That stock. So Vodafone was up 3.5%. Very good volumes, by the way. Airtel as well was up 2.5%. But just remember this, viewers, it will be a concerted price hike by all three players. It cannot be by Vodafone alone. So if you bought it on the rumor that Vodafone will hike the prices, I think that seems to me at least a bit far-fetched. But let's see. It's very difficult to predict when the price hikes will happen this week or later. But telecom stocks are certainly in focus. Maybe somebody knows more than I do. Let's wait and watch if the stocks do better today as well. Now, the stocks in news. Car trade, the base deal of 400 crores at 820. The current price is 857. So it's a discount of about 4 to 5%, if you will, 4.5%. Let's see if the stock cuts back a little bit. The sellers, of course, are known. But let's see if the stock puts back a little bit. So this is one stock on my radar today. The other one, is Ujjivan Small Finance Bank. Now this stock will certainly correct today. They've guided, the new guidance for Ujjivan is that ROEs will fall below 20% versus 26% in FY24. They've also gone and said that loan book growth is at 20% versus 25% earlier, which is also a sharp pullback. And they've said that credit cost guidance has been hiked to 1.7% versus 1.4% earlier. Loan growth coming off, credit cost moving up, so pressure on NIMs as well as ROEs coming off. Add to that the fact that there are talks of a farm loan waiver in Telangana. And of course, brokerages have said that waivers do not cover any loan including MFI, but does impact the credit culture. This is the IIFL view. And there is an INCRED view which says that largely PSU exposure, but sentimentally negative for MFIs. Now remember, Ujjivan SFB has some exposure here to that segment and the MFI segment. So very likely that Ujjivan has a double blow and will react today. So might be a key negative stock in the session today. Garden Reach Shipbuilders might be positive. They've gotten an order win. The order win, if I'm not wrong, is about $54 million. So about 450 crores. It's for 7,500 deadweight tonnage. But more importantly, the number is 450 crores, 54 million or 450 crores. So watch out for this one. May get a whiff of life. What will certainly do well is TB or Tech. I would stick my neck out and say that this will do well, because Goldman notes off late have done very well. Their analysis or their rationale for this note is also positive. They say that initiate with a buy target price of 1970, 24% upside. What Goldman is saying essentially is they expect free cash flow to the PAT ratio to stay higher than 100%. Imagine the free cash flow that this business will generate according to Goldman Sachs, and you would ideally love businesses with good free cash flow. They also believe that the operating income will drive about a 30 to 33% EBITDA and net income CAGR from a period of FY24 to FY30. It's pretty strong, so watch out for this one. Lupin has gotten an EIR from the US FDA for the Somerset manufacturing facility. Let's see if there's a bit of a corrective move here. Inox Green, the board meet on 26 June to consider raising of funds. Watch out for this one, 7% higher that day on Friday. Let's see if there is more in store. And Prestige Estates, board has approved raising up to 5,000 crores via QIP. Official declaration has come in. So watch out for this one too in the session today. Could be an interesting one. Last but not the least, a lot of scare around Quant Mutual Fund because of the story done by one of the websites. Now, Quant has given their release. The release doesn't deny what has been mentioned in the story by the platform, but this is an official release that has come to me as well. They say that recently Quant Mutual Fund received inquiries from SEBI, and we want to address any concerns you may have regarding this matter. They say that we want to assure you that Quant Mutual Fund is a regulated entity, and we are always fully committed to cooperate with the regulator throughout any review. We will provide all necessary support and continue to furnish data to SEBI on a regular and as needed basis. Because this is important, because Quant is not a small fund. 90,000 crores, over 90,000 crores of assets under management. And there might be worries for mutual fund investors. I just want to assure you that this does not mean your wealth will get lost. Please bear that in mind. Your wealth is safe. If you put money into Quant Mutual Fund schemes, the NAV doesn't come down or your money doesn't get lost. That's the limited point I want to make here. What SEBI does, if it does with Quant because they have received the queries, is a separate matter altogether. But your money parked into a mutual fund scheme doesn't get impacted as a result of something like this. It impacts stock prices, yes. It doesn't impact your money, the safety of your money. Yes, the NAVs may get impacted. We do not know that as of now. But bear in mind, your money is safe and secure. We have written to Quant. We are waiting for Sandeep Tandon to come and give a clarification on air as well. Let's see if that happens. But an important part of Trade Setup today was this clarification from Quant as well. Thanks so much for tuning in. Have a great day ahead.